Hello guys, Beastlorian here. Today I decided to make my first video for you guys on trading. I have a couple of things listed out on what I want to cover today. Starting with how to get started trading, what you need to start trading, where you can chart, some different things about strategies, what kind of strategy is going to be best for you, and just some different tips on trading. So let's get started. What do you need to start trading? The first thing I have listed is $100 worth of Bitcoin. Now, as some people might say that you don't need a certain amount of money to start trading, but in reality, when you withdraw coins from an exchange or try to move from one exchange to another, they're going to charge you a withdrawal fee. And that withdrawal fee is usually somewhere around $5 or more. So if you've only got $10 and you're trying to move off an exchange, they're going to charge you $5 for that. And that's going to be half your trading equity. It's not going to work out for you. You can't do that. So at least $100. If you have more, that's even better. But we're going to start with a small amount for now. Anyways, the next thing you need is two-factor authentication. When you start on an exchange, the first thing you should be doing is getting that two-factor authentication set up. So that way you are as secure as possible. The next thing is you should have a workstation so you can check, look at charts and see that you're not getting a bad deal when you make a trade. You can trade on your phone if you want, but if you do that, there's always the possibility that you punch in the numbers wrong or you don't get a good picture of what's actually happening in the market. So a good workstation is important. Now, that being said, you don't need 10 screens like I see some people talking about. One screen is perfectly fine. So next I want to cover where is a good place to trade. For me, I like Coinbase, Binance, and BitMEX. Coinbase is great for fiat to crypto trading. So if you have US dollars and you want to buy into crypto, they have the largest coins there that you can buy into. And then you can move that off to another exchange if you like. Second, Binance is right now probably the best place to trade Bitcoin for altcoins, and vice versa. They also have some other base pairs like Ethereum, Ripple, and Binance Coin on Binance. And some advantages that Binance has over Poloniex and Bittrex would be they have higher liquidity and lower fees. And they don't require KYC if you're going to get started there. Next, BitMEX is great if you know what you're doing, but I do not recommend it for newbies. The advantage to BitMEX is they offer you up to 100x leverage on Bitcoin perpetual swaps contract. They also offer a few other contracts there, like the Ethereum USD perpetual swap contract is also there, and a few others. Like I said, though, if you're new, I don't recommend going there because it is very easy to get addicted to that leverage and lose your money very quickly. So next thing to look at is where you're going to be charting. So you need to have a good idea of what's going on in the market and see price movement over time. And you want to know when to buy and when to sell. So charting is very important. I've got two recommendations on where to go charting. The first is charts.cointrader.pro. The advantages to that, to charts.cointrader.pro, is it's free. It does not have any ads on it, and it has some cool charts for market cap and dominance, market dominance charts. I've got pulled up right here. So right now we're looking at the altcoin market cap, total market caps. This is the combination of all the market caps for altcoins. Which is very handy to look at. You can also do the same thing for, let's say we want to go look at altcoin dominance chart. You can look at Bitcoin dominance chart. You can see, you can pretty much go look at any dominance charts if you want, or market caps. You even have some supply charts. I'm not sure those are really set up right though, so I wouldn't swear by those. Some downsides though is it only allows you to get data from CoinMarketCap or CoinPaprika. I don't know if they have any others on there, but that's for the most part. My second recommendation is TradingView. The downside to TradingView is if you don't want to pay for the pro version, which can be quite expensive, they will have ads on your screen, which is a huge pain in the ass, and there's some limitations to the to the interface. Like you can only have 2 or 3 indicators up, whereas if you have the pro version, you can add many more indicators if you want. Some advantages, I guess. Another advantage would be, or sorry, I haven't talked about advantages yet. As far as advantages go, you can choose which exchange you want to look at. So if you have a pair like Cardano, for instance, you can take it from Kraken, Bithumb, Huobi, Binance. They have all the major exchanges to choose from here. Another advantage is if you do want to go look at stocks and commodities, Forex, anything really, they're going to have it here. So next, now that we have a place to chart and we know where to trade, we're going to talk about different kinds of strategies and what strategy might be best for you. So to decide what strategy is best for you, the main thing you want to look at is how much time you have on your hands to trade. There are a lot of people out there that have 9-to-5 jobs and they got kids and a wife to go home to. They're not, or a husband to go home to, and they're not going to have a whole lot of time to put into trading. So maybe they got like an hour a day. Maybe they only have a few hours a week to put into trading. And so for those people, the best strategy for them would be longer term strategies. So either buying a bundle of different currencies and holding it for a long period of time, or working on trend following. So trend following is going to be the first, other than like just mainly investing, like buying a bundle of cryptocurrencies, trend following is going to be your best friend if you don't have a lot of time to trade. And it's also a very strong strategy. So even if you do have plenty of time to trade, you can still do trend following. And it's actually probably one of the easier, more or less experience required methods of trading. So what you want to do when you're looking for trends is zoom out. And this is going to be we'll go look at the liquid index, the Brave New Coin liquid index for Bitcoin, and zoom out all the way. So that's the 3-day candles we're looking at. So if you're a trend follower, the thing that you want to look for are macro trends. So long-term price is increasing. That means it's very easy for you to buy and hold and for the price to go up. Whereas on the other hand, if we were looking at something where the price over time was going down like this, at any point in time, maybe the price would spike up and maybe you would be able to make some money there. But if the general trend is down, then the potential for profits is much, much less than if the overall trend is upwards. So as a trend follower, what you would be looking for here, and I'm going to be mostly talking in hindsight here just to give you guys an idea of what trend following would be like. If I can place that, there we go. So we got our macro trend here, pretty bullish. And then we can see over time that there are bubbles. And these are points in time where the price deviates from the trend, moves up and away. And generally, after it deviates upward violently, it will tend to correct back to the trend, macro trend. And since we have a bullish macro trend, it goes up more than it will go down back to the trend. So what you're really looking for in this sort of situation is to look for these points where you see the trend, the shorter term trend inside the macro trend, start to accelerate away from the macro trend. And that's where you would want to think about buying and holding. And when you see that the distance moving away from the macro trend is starting to slow down, so you see it moving away faster and faster, and then it goes sideways and it slows down, maybe you would think about starting to take some profits here and move on to the next trade, move on to another coin, move on to whatever other market you're looking at. And then as you see it start to accelerate again, maybe you would want to buy back in here and wait for the price to stop moving away from the macro trend again. You can apply this to altcoins as well. It doesn't have to be on the 3-day zoomed out all the way like this. If you do have more time to trade, you'd be able to trade more short-term trends. So maybe you'd be trading on the 4 hours on an altcoin or something like that. It's all up to you how much time you have and how much time you're willing to sink into trading. All right, the next trading strategy that I have listed is swing trading. So swing trading is very similar to trend following in that you are looking for trends and you are trying to follow the trends. But some people will say that swing trading is all about buying the bottom, selling the top, buying the bottom, selling the top, and maybe if you're doing Bitcoin shorting. But really, I mean, it is that, but but it's more about following the trend and taking minimal drawdowns when the price stops going up. So you're still looking for those trends. You got the macro trend, and then we can go and look at a smaller trend inside Bitcoin, like right here. And so the trend, the price stays close to the trend. It deviates from the trend. This is where you would want to think about getting out. You see, at any point as it's going up would be a great time to think about selling. And then as it comes back to the trend, as it retests the trend after a strong deviation, that would be maybe a good time to buy back. There are cases, however, where you would be following the trend up. So maybe Bitcoin's so dang bullish that after it goes up, it just keeps going up. But here's a great example. So in the end of 2017 into 2018, we had a point where, so we got our macro trend. And then we have a deviation, another smaller trend within that trend. And the price deviates up here. It starts to deviate a lot from the smaller trend. And then it pulls back violently, it breaks through the trend, and then comes back up and tests it and fails to break through it again and keep going up. And then it starts to go down. And this is where we entered our bear market in 2018. So in these cases where you see the momentum dying, it's very far away from the trend. It is starting to go sideways. This is, it could go higher, but what you're really looking for is the lowest possible risk trade, highest reward. And as it's so far away from the trend line now, neither of those things are very abundant right here. So maybe this is where you think about selling some or hedging and waiting for a better opportunity to get into the market. Now you might buy back here as it retests the trend, or you would watch it go through and come back up and test the trend from the bottom and get rejected by the trend, which is a strong indication that it is going to start to return towards the longer term trend. So as for swing traders, you would be looking at a shorter, so you're looking at these shorter trends within the larger trend, and then you can see it deviate from the trend and come back to it, retest it, gain strength again, start to accelerate away from the trend and come back to the trend and accelerate away again. So these are points where you would want to see it going sideways, think about selling, and then wait for it to test the trend again, or wait for it to bounce off the trend, and that's where you would think about buying again. And so if you're a swing trader, you can do that on many different time frames. You can do it on very short time frames if you want. It depends how volatile the coin you're looking at is. Bitcoin is not the most volatile coin, but it is a very strong mover. So and it's very liquid. It's the most liquid cryptocurrency, which makes it very easy to move in and out of. Oops. All right, what do I have next here? So after swing trading, we have a kind of market making versus day trading. Day trading is very similar to swing trading, but instead of looking for, let's look at Link. Link's a good example of a coin that would have been a great hold in 2018. It's got a long-term macro trend moving up. As it returns to the trend and starts to move away again, this would be a great opportunity to think about getting in. For swing traders, though, you're going to be looking on much smaller time frames. I'm not a huge fan of swing trading, or sorry, not swing trading, of day trading, because it takes a lot of time. These are like the people that want to do day trading will have 8 or more hours a day to watch charts, And if that's what you want to do, maybe you're getting started and you want to learn how to trade. A lot of people will start to put in a ton of time right at the beginning when they're learning how to trade. And so they end up doing this whether they like it or not, just because they've got so much time that they're sinking into it. So for a day trader, something you might be looking at is, and I say day trading / market making because it's a very similar style of trading. So for market making, you would look for these channels, and swing traders would do the same thing, where you look to buy at the bottom. You look for very volatile coins, ideally with high liquidity, which means that the price moves very quickly and it's very easy to move in and out of this coin. And you would look to buy it at the bottom of the channel and sell at the top, buy at the bottom, sell at the top, buy at the bottom, sell at the top. I wouldn't necessarily say that. I mean, it has the potential to be one of the highest returning over time, trading strategies, but it also takes the most time to and effort to execute, which makes it not the best for everyone. In fact, I would say that very few people are able to successfully do this. So I cannot recommend it to people who are getting into crypto for the first time or getting into trading for the first time. And I would rather recommend that those people look into longer term strategies like trend following. So moving on, what do we have next? So I talked about what to trade. I want to talk about which coins you should be looking for. And so the main points are going to be high liquidity, which means that the coin has a strong order book. It's easy for you to buy a lot of it and sell a lot of it without moving the price much. This is partly dependent on how big of an account you're working with. So if you got $1,000 and you're working with a coin like Ethereum, you could buy or sell down the up and down the market book. So just like execute an order at market price, and you'll get it relatively close to the market price. Whereas if you are trading a small altcoin, like some shitcoin or a coin that just isn't recognized yet, a coin maybe that's not on an exchange like Binance, for instance, that doesn't have many people trading it, is going to be very difficult for you to move in and out of. So maybe if you have a very small amount of money that you're trading with relative to some of the people out there, nothing shameful in not trading with a lot of money, then you might have an advantage on those smaller coins. You'd be able to trade, if they have higher volatility, you'd be able to trade them, whereas some people with bigger accounts would not be able to trade those effectively. So two big things: liquidity, volatility. If you got both of them, that's excellent. Trend strength. So if you want to look for coins that are very bullish, which means that they go up over time and they are moving away from the macro trend, or they're close and starting to move away from the macro trend. So Link's a great coin to do this with, to trade with. It's high liquidity, relatively high liquidity. It's high volatility, and it's pretty bullish, especially compared to some of the other coins in 2018 and 19. It is considerably more bullish than most of the altcoins. And so you'll see that it's very volatile, and as it starts to move away from the trend, there's plenty of opportunities to be buying and selling on the way up. So the next thing I want to talk about is risk versus reward and position sizing. So first off, when you are trading, it is very easy to get into a very bad habit of putting your entire account into a single coin at a time. It's extremely risky. Especially as you're starting out, people will do this a lot. They'll think, oh, well, I'm not going to get those big gains I see people making on social media if I spread out amongst different coins, or I keep a majority in a much more liquid and reliable coin like Bitcoin. And I would have to say that it might seem that way, but in reality, if you go all in a single coin and it dumps, it's gonna take so much time to work back what you lost by trading other coins, and it's extremely risky, high stress, and I can't recommend it. As far as risk versus reward goes, the idea is you want to lose as little of your entire account's balance with each losing trade. So that means that if you're 100% in an altcoin and it goes down 10%, you lose 10% off of the entire balance of your account. But if you only have 10% of your account in an altcoin and that altcoin goes down 10%, then you're only talking about a 1% drop in your entire account balance. And the goal is to keep that amount as low as possible. And then also, as you are trading several coins at a time, you'd be able to if you do have a high risk versus reward, a high reward versus risk, then you would be able to continue to make profits more steadily over time if you're trading multiple coins. So next, I listed that I wanted to talk about entries, exits, and when to hold versus when you want to think about getting out. Earlier, I was talking a lot about trends and trend strength and deviation from trends. So ideally, you don't want to enter. So we can keep looking at link here. As you see, the shorter term trend accelerates away from the macro trend. I guess you don't know this macro trend is here yet, but the fact that it rose so fast, the first thing you should be thinking about, okay, how is it going to go back down? And you actually don't know when it's going to start going down until it breaks that first trend. So if you were trading this and you see this trend here, you would be like, hell yeah, I'll trade that. I'll buy it. And then, maybe you see the small dip back to this trend line here and you're like, hell yeah, I'm going to buy that. And you ride the trend up and you see it get really far away from this small trend here. That might be a good indicator that you're ready to get out, especially as you see it going sideways up here. So it's got all these huge green candles and then it's got a bunch of sideways red, smaller candles. This might be a good indicator to leave. And in fact it was. So earlier I was talking about maybe you want to buy on the retest of the trend as it starts to move away again. So you could do that if you wanted to. You buy back in here. And this is kind of an interesting situation. So this is what we would call a short squeeze. But in this case, I don't believe it's margin traded anywhere, which means that no one can short the coin. So I guess what it ended up effectively doing was getting people to think that it's going to keep going up, and people who have been in the trend for a while are saying, wow, I want to get out. So they'll sell at close to the previous high. And then afterwards, there just won't be anybody left to buy it, so the price will dump. So anyways, as it's far away from the trend line, that would be a good opportunity to get away or get out. As it's close to the trend line, good opportunity to get in. On the macro trend line, you can see it starts to move up again, starts to trend upwards. And so you can kind of start to draw a new trend here if you'd like. And each time it hits that, so the third time it hits that might be a really good opportunity to get in as you see it moving away. And then as it gets really far away again, good opportunity to leave. I do want to talk about a little bit about market orders versus limit orders. Especially for people starting out, the instinct is going to be just market buy. So it's very easy, it's very fast. You just you say how much you want to buy for a coin and you click execute and it'll buy it all at once. On higher liquidity coins, it's not nearly as much of an issue because there's not much of a spread for you to lose money on. Smaller coins, you're going to want to try to buy at the bottom of the spread. If there's more than a 0.5% in in the spread, that's an opportunity to make 0.5%. Maybe that's not a lot. Maybe that doesn't sound like a lot to you, but if you're making 0.5% a day in the stock market, you'd be pretty dang happy. But anyways, the point I did want to get to for limit orders versus market orders is, especially for newer people, as you see the price moving up, your first instinct is going to be, oh my God, it's moving up. I need to get in this right now. But it's not, because it goes back down. And look, you could have bought down here instead of up here. And now you feel like you made a bad decision. You're not sure if the price is going to keep going down. You start to panic. Maybe you sold down here on the way back down. This is not the situation you want to be in. So as you see the price start to deviate from the trend, and it's up here now, you don't want to buy it. You want to wait. And if you can buy it below, if you can set a limit order, which means that you put an order in below the current market price. If you set it below a moving average, usually that's a pretty good, and it's above the trend, just a good strategy so that you don't end up buying at a terrible price. So in a strong trend, if you can get it below the moving average and above the trend, that is excellent. And I think that's pretty much everything I had that I wanted to talk about today. So if you enjoyed, please like, comment, and subscribe. And yeah, if you want to message me on Twitter, you can do that, or hit me up in the comments section. Let me know what I did well, what you guys want to hear more about. If this video gets a lot of attention or you guys really like it, maybe I'll make more in the future. But anyways, thanks for stopping by, guys. Thanks for watching my video. Have a good one.